All right, we're going to go ahead and get started. Thank you for joining us for today's webinar, Smart Budgeting for Nonprofit Success. Please feel free to submit your questions in the chat at any time. We'll address all questions at the end of the presentation. Additionally, this webinar is being recorded and a copy will be shared with all attendees after the presentation. Our speaker today is Kyle Good. Kyle is a director in our Outsourced Accounting Department. Kyle, over to you.
All right. Thank you, Nicole. As Nicole just mentioned, my name is Kyle Good. I am the director of our Outsourced Accounting and Advisory Services Department here at Rubino. I started my career in public accounting in 2006 as an auditor, and then I took a brief detour into the private sector where I worked as a controller for a small company in Rockville, Maryland for about 5 years. During that time, I kind of realized that what I really liked about my job and about finance and accounting was sort of being a part of the organization on a daily basis and sort of helping them run their business from day to day. But I also realized during that time that I kind of missed some of the variety that public accounting provided me. So about 7 years ago, I returned to public accounting here to Rubino to be a part of our outsourced team. And now I get the opportunity on a daily basis to work with several different not-for-profit organizations and small businesses. So before we get into today's discussion, I'd like to take a minute or two to tell you a little bit about our outsourced accounting and advisory services. So we have a team of about 25 members here at Rubino, and they can help with all aspects of outsourced accounting. We can do anything from AP and payroll processing to month-end reconciliations and financial statements, and all the way up to some of the higher level sort of financial planning and analysis services, such as budgeting and forecasting, which is going to be sort of the meat of our presentation here today. So let's take a look at our agenda. Today's conversation is really going to be more about sort of the strategy that goes into budgeting rather than a how-to on building your budget template. But we are going to take some time to hit on each of these points. And then at the end of the presentation, we'll leave a little bit of time for some questions and answers. And we are going to start with sort of talking about why budgeting matters to nonprofits. Budgeting is a critical process for nonprofit organizations. It's really sort of where you're getting your new fiscal year started. It's also where you're getting the permission and approval from your board of directors to start sort of working towards those goals that you've set for the coming year. It's a daunting task, budgeting. I like to think of budgeting as sort of a combination of strategy and Tetris. You get a lot of different pieces of information, and it's the finance team's job to kind of turn those pieces and fit them into sort of the bigger picture of the organization and where you want to go in the coming year. And regardless of whether you're a trade association or a public charity or healthcare organization, all nonprofits are going to face certain common challenges. I like to think at least most nonprofits have some of these challenges in common. The first one being sort of your board expectations, right? Because most nonprofits, the board turns over every, say, 2 to 4 years. And every time you have a new board in place, they have their own sort of ideas about where the organization should be going, and they have their own expectations. And it's really sort of the executive team and the finance team's job to kind of explain to them how their plans the internal team's plans fit into those expectations, and how it's going to help advance your organization's mission in the coming year. Second item that is a common common issue that many nonprofits face would be sort of restricted funds. In that case, a lot of times you're receiving a large piece of your puzzle for the next year, some of the revenue in the previous fiscal year, and maybe your donor has restricted those funds for either a certain program or just for the general operations in the next fiscal year. And even though you've already received that revenue, you have to kind of keep in mind how you're going to sort of parse out that funding throughout the next year to cover the most expenses that you can. And then the last question or issue that a lot of nonprofits tend to face is going to be grant compliance, especially if you receive a lot of public funding from, let's say, a county or a state or federal funds. All of your grants, most of them are going to have some sort of compliance requirements that you're going to have to meet when you get those grants. And the specific compliance requirements that you really want to keep in mind during the budget process is going to be any sort of level of effort requirements for certain key employees, or if there's some matching component to your grants. You're going to want to keep that in mind as you're coming up with your plan for the coming year. So every budgeting process starts out with a strategic conversation. Between the conversations usually taking place between sort of the executive team and the finance committee and your accounting and finance team or your outsourced accountants. And it's really where you want to sort of start laying out your goals for the coming fiscal year. And those goals are going to be different depending on sort of the maturity of your organization. A startup isn't going to have the exact same goals as a trade association that's been around for 125 years is going to have. And one thing to sort of keep in mind is that for some organizations, this conversation can be really, really simple. Maybe, the goal is just sort of maintain the status quo. Your programs are funding your expenses, and you don't really need to, there's no outcry from your membership for new programming. So you can kind of just keep chugging along, and it can really simplify the process. But then there are going to be other organizations who, want to sort of build out something new in the coming year. Maybe your membership has requested a new educational program about a hot topic in the industry. Or maybe you have identified sort of a different community of people that you want to start providing services to in the coming year, and you need to sort of plan how you're going to reach them. Or some organizations, larger organizations, I like to think in this case of sort of the example of a healthcare organization maybe who wants to open up a new clinic. You may be in the market to purchase a building. And then maybe your organization has been on the other side of things for the last couple of years. Maybe you've been in the red for a couple of years here, and it's really this discussion is really a time for you to kind of take a look and look at your programs that you've been carrying out over the past several years and see if maybe there's a program or two in there that has been consistently losing money and it's not critical to your mission, or maybe it was critical to your mission at one point in time but no longer is, and you may need to consider cutting that program and sort of saving some money there and sort of work your way back towards getting back into the black for the next fiscal year. Once you've sort of sat down and started this conversation about your goals for the coming year, the next thing you want to think about is how are you going to achieve those goals? What do you need to get there? And really, those needs are going to come down to really two main questions that I think of. And one is how are we going to fund it? And then the second question that comes off of that is, what sort of resources do we need to get that funding? A couple of funding sources to think about. If it's a new program that you're building out at the request of your membership, maybe it's time to look into increasing those dues. If they want a new program, then it's probably a good time to consider maybe increasing your dues, whatever, 5, 6, 7%, to fund this new program. Or if it's an educational program that's sort of a hot topic in the industry, do you have any industry partners who might be willing to sponsor that program? And then if you're in the situation where we were talking about purchasing a building or a large piece of equipment, and you've got sort of a donor base that can afford to give a little bit more, maybe you want to consider running a capital campaign to purchase that building or that piece of equipment. And then, you know, any funding increases or where you're going to get that funding, it's going to cost you something to create that funding. So you want to start thinking about sort of how are we going to go out and get that money? Do we want to hire more people on our internal development team to reach out to those donors or those industry partners? Do we want to outsource that portion of our work? Or, another thing to think about is if you are building out a new program, what kind of resources do you need to build that program out? Do you need to hire a developer to build out an online educational program? And you just want to make sure that you're thinking about sort of what is the cost of generating these funds for the coming year. And the last piece of this initial sort of strategic discussion that you're going to have when you're talking about your budget is you want to really sort of think about how the budget is really your means to create transparency and accountability across your organization. I mentioned earlier that boards turn over in you know, every so many years. And, during this beginning period, you want to really talk to your board and you want to maybe find a champion amongst your board members for a new initiative. Or if you need to develop a committee, just get them involved, get them excited about what you're doing for your coming year. And then you're also going to need to make sure that your program managers, people who are actually carrying out the work on the ground, they're really going to want to know their budgets inside and out. They want to know each line of that budget because they're really your first line of defense against over or underspending. They're the ones who are monitoring the invoices from their subcontractors as they come in. So they're going to want to know, how many subcontractors do I have on my program? Is it one, two, four? And also, what's the time frame of those contractors? Are they front loaded at the beginning of the fiscal year that's coming up, or is it something that's going to be happening over in the second half of the year? You just want to make sure that that your program managers have a good understanding of their budgets. Once you've kind of concluded that initial discussion of what you want to do and sort of some initial ideas about how you're going to do it, then it's time to sort of get into the actual components of building that budget. I mentioned earlier, we're not going to talk specifically about how to build a budget template, but we do want to talk about sort of what the building blocks are to a good budget. And nonprofits, it's sort of a unique situation, I find, where in a lot of cases, it seems like the organizations kind of have the revenue piece of their budget before they really have the expenses planned out. So you're really trying to sort of figure out how you're going to fit your expenses into sort of the funding streams that you already have. Which donations you can pay, your administrative salaries out of, or, you know, if you had a donor who did give you a restriction for a specific program, what are the costs that are going to go into that program? Similarly, if you are being funded through a lot of grants, you're going to want to know sort of who it is that you have working on that grant. Is it a brand new grant? Is it a renewal of an old grant? Or is it just kind of a continuation of what you've been doing for the past few years? Are there will you need to hire a few new staff to complete the objectives of that grant? And then, every organization is going to have sort of their big program revenue generators. For membership organizations, a lot of the times that's going to be their annual conference. For some other organizations, it's usually, maybe a community-based event that they put on. It could be, but you're usually going to have an idea of sort of what your funding is going to be for those sort of events, and you want to sort of start from that point, and you want to think about how you're going to cover the most expenses with that funding. The backbone to every budget, in my opinion, is really the salary allocation process. And this is because payroll, salaries, benefits, that's going to be the biggest cost to pretty much every organization. Um, and and I know there are some organizations out there who tend to kind of dump all of that personnel costs into their sort of G&A class in their accounting system. And I mean, that's a good method to kind of get to gather your total cost of your personnel, but it's not really going to help you when it comes to evaluating your programs. You really want to try and develop that allocation at the beginning of the budgeting process to look at sort of what percentage of each individual's time they're spending on each program, including your executive team. You want to think about them as well. And let's not wait until come audit time comes around and we need to prepare our schedule of functional expenses for our audit and our 990, and then just try to do all the allocations at the end of the year. And there's lots of different ways to do those allocations. You could take a survey of your employees. You could use your timesheets. There's lots of ways to sort of come up with what those allocations are going to be. And then you're also going to want to start thinking about sort of your other direct cost expenses, and sort of what is needed for each program. In the example I gave earlier of reaching a new community, maybe, you need to consider increasing the marketing budget on that particular program, or again, developing a new online educational program. You're going to need a web developer. You're also going to need people to kind of write the content for that program. So, you want to sort of think about what you're doing sort of with each program, what consultants you need, all of that. Do you need a venue for the program? And you just want to kind of line that up with each of your different programs. And then the last thing that I like to do when I'm starting out on a budget is sort of develop an indirect rate to look at. And again, it's all in an effort to sort of spread those indirect costs across your programs so that you can get a really good idea of which programs you're going to be making money on and which programs, you're going to be breaking even on. There's lots of different ways to sort of develop your indirect costs. I typically generally like to take a pool of your G&A costs, mostly executive salaries, rent. Those are usually the big numbers, and kind of divide that over your total direct cost and sort of spread it across to the various programs in that way. And I feel like that gives a good sort of rough estimation of how you're going to be using your resources throughout the year. To go back to sort of the restricted versus unrestricted funds comment from earlier, you want to understand those restrictions that your donors have given you. If it's a time-based restriction and it's just they want to make sure that you have operating funds for the next fiscal year, hey, that's great. You just release it all right away, but you still want to plan on sort of how you're going to use that funding up throughout the year. If it's a program, you want to make sure that you are spending in an appropriate manner to make sure that that funding lasts until your program ends. If it's a short-term program, or if it's an ongoing program, you want to make it last as long as you possibly can, because you really don't want to tap into any of your unrestricted reserves if you can avoid that during the year. Of course, bills are going to come up and everyone's going to have to spend what they have to spend to operate their business, but you just want to try and keep these things in mind. And also, if there are reporting requirements for each of these donors, you really want to start setting up your classes for those in your budget. If you need to, if you know that your donor is going to give you $500,000 at the beginning of your fiscal year, and it's really going to be your job to kind of report back to them on how you spent that. Make sure that you set up a class for that restricted contribution so that you can easily just pull that information for them when you need it at your your designated reporting times. And then you also just want to make sure that your plan for the year is really aligned with your organization's mission. You want to make sure that you're using those funds that you're bringing in to provide the most benefit to those that are you're there to serve, regardless of what that mission may be. You just want to make sure that you're spending in accordance with that. Whenever we start talking about the budgeting process, we also want to start thinking about sort of our cash flow management. And normally, your cash flows aren't necessarily going to match up perfectly with your budget for the next year. Because a lot of times when you're building out that budget, or at least I know when I'm building out a budget, I'm thinking more along the lines of matching up my revenues and expenses with when the events are actually taking place and not always thinking about sort of when I'm receiving the payments for those. So, we want to make sure that we're aware of what our high points are in the year with regards to cash coming in and cash going out. Membership organizations, if you're still on a calendar year or fiscal year based membership renewal cycle, you know that the high point of your cash for membership is going to be either near the end of the calendar year, near the end of your fiscal year, as everybody's renewing for the next year. If you're on a continuous membership cycle where you have people renewing every month, then you'll see a little bit more of a smooth influx of cash throughout the course of your fiscal year. But you also, which will be helpful for providing those services that the members need. Um, and then if you have a large conference or an educational event, are you going to open up your registration early? Because you're going to have to think about all of the and let's say 65% of your registrations come in that early bird period. You're going to have a lot of cash on hand once you open up that early bird period. But then, when are you going to have to start paying your bills for your conference? When are your deposits due on your venue? When are your first initial food and beverage payments due? When's your AV team going to ask you for half their costs for the event? So you want to keep a mind on sort of when all of these events are taking place. And what you really want to try to avoid doing in this case is spending that money before the event starts. And then one more thing to think about for a different type of organization. I mentioned it a little bit earlier, but if you have grantors, do they fund you up front or are you on a cost reimbursable basis? And that's also going to sort of affect when your cash is coming in and when it's going out. So sort of as I just was mentioning, let's think about when our conference bills are coming in. If we run a large conference, let's think about when our food and beverage payments are due. Let's think about what kind of requirements our contractors who are going to be putting on that event are going to have in their contracts, half up front, half afterwards. All of these are different things that you may see during the course of any fiscal year. And then for grant-based organizations, you want to start thinking about your consultants and subcontractors that you're using. I've seen a lot of cases where subcontractors can be a little bit slow on their invoicing. They may invoice you for 3 months all at the same time. And, for you, if you're a cost reimbursable basis with your grantors, you're going to be in a situation where you're trailing on your sort of expected revenues for the year because your contractors haven't been billing you on time. And, you may see a sort of a pile up of of AP and you don't really have the cash to make all of those payments immediately. Or, maybe you're fortunate enough that you've got a mix of funders, some that will provide the funds up front, some that provide it on a cost reimbursable basis, but you want to be careful there because even if you're not trying to, you could be sort of commingling funds a little bit there using sort of the funds from the grantors that pay up front to pay your contractors on the cost reimbursable grants. So you just want to keep all of these things in mind as you're preparing your budget and just sort of these different things that could come up. There are a few common mistakes that I see some nonprofits make in their budgeting process. The biggest one I think is sort of spending that deferred revenue ahead of providing those services. And I always kind of try to take a look when I'm working with my clients and preparing their monthly financial reports. One of the things I always like to look at is sort of their cash balance versus where their deferred revenue is. And if I see that their cash balance is less than what they have in their deferred revenue, I like to just kind of give them a little heads up that, hey, you guys are sort of spending these funds that you've received from your members or from your registrants for your event that's coming up in 2 months before it's happening. So, just want to keep an eye on that and make sure that, you're going to have all the funds in hand that you need when the time comes to provide those services. A lot of times when you're in the budgeting process and you're working with your programs people, nobody wants to be the program director that goes over budget on their expenses. So, their initial draft of what their budget's going to be is usually going to be a little bit inflated over what they probably need to run their program. So, when you look at that sort of initial draft that they may give you, you want to sort of have a conversation with them and sort of make sure that they are trying to, budget responsibly and making sure that they're not over padding. I mean, you do want to have a little bit of cushion in your expense budgets, but just in case, because life happens and sometimes an expense comes in a lot higher than what was expected. But you just want to be cautious not to over pad that because you have a limited pool of funding sources and revenues. So if you're using all of those funds to for one program and you have five other programs that are now underfunded because of the way you've kind of padded your budget, then you could be looking at a different kind of problem as you get down the line on your year. And then the last thing I like to think about here is that there's kind of a fine line between getting too many people's input into the budget and not getting enough input. You can't really just have the CEO and the director of finance creating the budget in a room without input from anybody else. You need your programs people involved. You want to be cautious about how involved you have your board get with budgeting. You don't want them dictating how you're going to spend your money, but they do need to be aware of what your plans are. So you really want to kind of keep that group of people who are really involved in the budget to really the executive team and sort of the programs people and of course obviously your accounting department. So once you've got all of your components and building blocks to your budget sort of put together, there are a lot of tools and softwares that can make budgeting easier. This isn't a tech stack webinar here, but there are some great programs out there that can help with budgeting and can sort of integrate your budget with your GL package. A couple of tools that we will use with some of our clients that we like are Drav and Martis. They're both great programs, but we're not promoting either of them specifically in this webinar, but they do make it easier to sort of create those budget versus actual reports that you're going to need later. And I mean, I think Excel is still a great starting point. And even when I am using a different budgeting tool to prepare a client's budget or work with a client to prepare their budget, I usually start with an Excel spreadsheet for certain things. Specifically, my favorite thing to sort of run through an Excel spreadsheet is going to be a staffing allocation for your employees. It just, to me, it's a lot easier of a process to kind of do that work in Excel. You can sort of go in and change around the percentages of people's times that they're spending on different budgets to sort of meet what the funding is that you have and making sure that that you are fitting into sort of that, as I mentioned, a lot of times you have sort of that funding piece before you have your expenses planned out. So it allows you a little bit of versatility when you're sort of planning that out. And then of course, whatever you're using, whether you're using a budgeting tool, or you're using Excel, you got to make sure that you're importing that budget into your accounting software, whatever software it is you're using. Could be QuickBooks, Intact, Zero, whatever you're using. You're going to want to make sure that you are importing that so that you can start creating some budget to actual reports, because really just the budget by itself is kind of useless without having the actuals to report against throughout the year. So a few sort of best practices here regarding monitoring and adjusting your budget. Obviously, you want to create those budget versus actual reports for the overall organization. You want to look at a high level sort of just total income statement, actuals versus income statement budget, and then you're also going to want to be creating budget versus actual reports on a program level. And those ones that you can create on the program level, you really want to be sort of reviewing that with the program and department managers on a monthly basis. And I would suggest that when you create those reports, you kind of consider sort of a three-column approach to it. You want to have your actual in your first column, then you want to be able to look at your budget year to date in the second column. And then the third column that I think you want to kind of look at is sort of your budget, your full year budget amount. And I like looking at both of those because they kind of can provide different insights when you're looking at those reports. So just looking at the actual year to date versus budget year to date, that's going to be where you can kind of identify specific areas where you went way over or way under to date. But there could be plenty of reasons for why those might go over budget early in the year. It could be that the expenses are front loaded on a specific program, and it's going to die off as the year goes on. So what you want to look at with that is sort of you're looking just to identify any problem areas that you have sort of immediately, and then you also want to look at it versus your full year budget, because you want to know how you're sort of trending towards finishing up your year. So are you trending towards being way over budget by the end of the year? Are you trending towards being way under budget? And if you're trending towards being way under budget, are you at risk of having to return some funds? So I think it really helps to sort of look at that strategically and see sort of both of those comparisons. And then you're going to want to review your budget versus actual with your executive team at least quarterly. You may want to do it monthly. I tend to have monthly meetings with the executive teams for a lot of my clients. And you just want to kind of, for that meeting, you really want to focus on that sort of overview, just total income statement versus budget. You don't really need to get into the nitty-gritty of each program with the executive team, because the CEO or executive director, they're really going to be mostly concerned with sort of where are we trending just for the full year as an organization. They're not as concerned, at least in a lot of cases I find, with which specific programs are running over or running under. And then you're going to want to review the reports with your finance committee and your board on at least a quarterly basis. They really need to be kept abreast of what's going on with the organization throughout the year because it's their job to sort of help ensure sort of some of that compliance that's their job, right? Governance of the funds, making sure that we're spending responsibly. And I've also found in some of those quarterly meetings with finance committees, maybe one of the finance committee members could work, on within maybe if you have a county grant or something and one of your finance committee members works for the county and they're running 3 months late on paying you, they may be able to get someone's ear and find out, why you're not getting paid. I think a great way to sort of look at these financial statements and how you're doing with your budget is to create a dashboard. That's usually where I like to start when I'm having these meetings. And you with any level, whether it's a program manager, an executive team, or the board, I always like to start from the point of view of looking at a dashboard because that can give you a real quick visual indication of sort of areas you may have trouble in. It could be as simple as just sort of a bar graph that shows your actual expenses versus your budgeted expenses year to date. And once you see that those areas that are particularly troublesome, then you're going to want to drill into sort of your more detailed BVA reports so that you can look at the specific accounts. And if you need to, drill down to sort of the transaction level and see, oh, well, this person billed us for 3 months worth of services in September, where instead of billing us monthly. And that's why we have this you know, crazy large AP balance in the month of September. And, in the previous months, we had almost nothing. And then, you want to provide sort of a summary with those quarterly financial reporting packages. I like to just do sort of a simple cover page that says, kind of financial statement overview, here's our revenue, year to date, here's what we had budgeted. Here's our expenses year to date. Here's what we had budgeted. I also like to sort of include some details about sort of our cash balances and our, AR aging and AP aging reports in that sort of summary, just to kind of red flag anything that you really think the executive team needs to be paying attention to, specifically related to payments that might be coming late from your funders. A lot of times the CEO can sort of get those things moving faster than maybe the outsourced accountant or the director of finance can get those moving if they have the time for that, especially if it's getting to be too far behind. You're looking at a lot of AR that's 90 plus days over. Um, So here's just a quick example of a dashboard that you could use. So up here in the top corner, the very top income statement, what that's showing, that's a very sort of high level, simple graph that's just showing you sort of your revenue versus your budgeted revenue versus your actual revenue. In this case, the budget is the lighter colored. Um, bar and the actuals are the darker colored bars. And in this case, you can see we're kind of moving along sort of as expected through April, May, and then we start seeing here in June, all of a sudden our revenue sort of outpaced our budget, which probably just due to some contractors getting invoices in late. And then you sort of see as you sort of flip over into the next fiscal year, sort of the beginning of the year, your actuals are trailing what you had budgeted. The second block here, this is just specifically related to your operating expenses. So, first set of bars that you're looking at there would be your personnel related expenses. So you can see that your salary is pretty much tracking in line with what you had budgeted through the first couple of months of the year. But now you look at the next section here, and your contractors are here. They're clearly behind in their billing, right? Because your actual is so much lower than your budget that you would have had to this point in the year. So this is where you need to get the program managers and the team really to sort of start reaching out to those contractors and saying, hey, let's get those invoices in the door because we need to, I'm sure you want to get paid, and we need to be able to submit our invoices to the government to get funded. A couple other graphs here, just sort of tracking AR and AP, current year versus prior year, and then just sort of an overall breakout of sort of where your revenue is coming from and expenses are coming from. And then bottom corner here is just a quick overview of your statement of financial position, which is showing sort of your assets and liabilities, which in this case is looking really great for this organization as their assets are, clearly, more than double their liabilities. So I think these are a great way to, sorry, sorry, Nicole. But I think this is just sort of like a great way to kind of summarize your activity in a couple of pictures. Now we can move to the next slide. The budget, when you set it up at the beginning of the year, it's really just sort of a goalpost, and running the actual business throughout the year, it's a living, breathing process, right? You can't just sort of stick the post in the ground and leave it there. So as you're sort of doing these reports and checking in on these things throughout the year, you want to be looking at how you're trending compared to your budget. And then you want to start considering sort of reforecasting on, maybe a quarterly basis. I've talked to some companies that like to do it on a monthly basis. I think that might be a little much, but at least quarterly, you want to be looking at this. And what you want to be looking at is, you know, when you look at that budget versus actual, are you trailing way behind where you expected to be? So does it look like your year may not turn out as good as you thought it was going to be? And if that's the case, let's get sort of in front of that and sort of put together a forecast based on sort of what has actually unfolded through the first quarter of the year, and sort of come up with sort of a new, this is okay, so here was our original goalpost that we set. This is looking more like what's going to happen. And let's just sort of keep tracking against both of those throughout the year. And again, just because you're trailing in the first quarter or the first half of the year, that doesn't always mean that you're not going to hit your budget by the end of the year. Your organization, and if your organization's revenue and expenses are really backloaded in the second half of the year, that's something that's good to know. And maybe there's not a need for as much of a uh, adjustment to your forecast at the midway point, but you just want to be making sure that you're constantly looking forward and getting out ahead of any potential issues for the year. So that's going to wrap up the presentation portion of this. So we take a little time for some questions and answers here at the end of for the last couple of minutes. And of course, if there are any questions that do not get addressed during the presentation, you can feel free to reach out to me. My information is going to be provided with the follow-up to this webinar, and I'd be happy to take the time to, take a phone call or a quick Zoom meeting to talk about any questions you may have.
Okay, Kyle, we have a couple of questions in the
Okay.
chat. First one, not for you, but will CPE be provided? Unfortunately, not for this webinar, but we will keep that in mind when we produce future webinars. The second question, as a membership organization collecting dues at year end, would it be possible to change to a rolling renewal cycle?
Yes, and that's a great question. We've actually helped a client go through that sort of transition. Um, and the biggest things to sort of keep in mind when you're considering moving to that sort of rolling renewal cycle, you really want to sort of keep in mind and ensure that you have a clean cutoff. So, if your annual renewal cycle was on a calendar year basis, you probably want to make sure that you have sort of that clean cutoff at the end of the calendar year. And then when you begin the next calendar year, you can kind of move into that rolling renewal cycle. And then the other thing that you really want to make sure that you do, and if you're considering that sort of a transition, is you want to make sure that you reach out to whoever your sort of membership or CRM system provider is, and make sure that they are aware that you're moving to this rolling membership, and that they're have everything set up properly to make that transition.
Okay. I don't see any other questions in the chat, but as a follow-up, we will be emailing out the webinar recording as well as Kyle's contact information. If you have any questions, please feel free to reach out. Thank you, Kyle, for your webinar today.
And thank you for all of you who chose to attend the webinar, and I hope I hear from you soon.
Have a great day. Bye.